Let's give you the markets update now. And local trade set for mixed trade today, with the local index muted and the rand continuing to rally, though. The JSE closing weaker on Tuesday as US Treasury yields rose once more and the earnings season in the world's biggest economy gaining momentum. Let's speak now to independent markets analyst Jimmy Moyaha, who is going to give us a quick analysis of how things are shaping up at the JSE. Jimmy, good morning to you. So let's start with that quick overview of how things are shaping up there at the JSE. Good morning.
Morning, Toli. Morning to the viewers. Markets have opened in the red, largely tracking, obviously, overnight weaker gains in the US as well as in Asian session. Sydney's up about 0.2%, but we've got Tokyo sitting flat and you've got Hong Kong sitting down about 0.5%. Our market opened down about 0.5% as well. Resources seem to be holding their ground, with commodities pricing seemingly a little higher than where we've seen it recently. Platinum up about 3% at this stage. Palladium up just under, or just over 0.75% rather. Gold up 0.75%, sitting at $1,936 an ounce there. Oil crucially up above that $90 a barrel level, sitting at about $91. Obviously, the Middle East tensions continue to drive that price a lot higher. As you rightly mentioned, the rand showing signs of strength, sitting at about 18.72 against the dollar, at about 22.84 against the pound, and about 19.80 against the euro. We know we've got our CPI print out in about 25 odd minutes or so, so that'll be a key indicator to see where we move to from here. In terms of the rand, we know that yesterday we got the monetary policy review from the SARB, and we're still expected to contend with higher rates or higher inflation levels and potentially higher interest rate as a result of that. And the CPI print that we will get in about 25 minutes will be a key indicator around where we go to as a country and as monetary policy going into the last sort of month or two of the year and possibly into the new year.
Let's launch into company news. Pick n Pay publishing its results for the 26 weeks, which ended on the 27th of August 2023, including a full year trading statement. What do their numbers look like?
So the expectation that we got from Pick n Pay earlier, I think about around the 3rd or so of October, so about the start of the month, was that the results weren't going to be the greatest. There were a couple of factors that they were contending with, slower cycles from a consumer point of view, but also dealing with their hyperinflation markets in Zimbabwe, with their Zimbabwean business there as well. But the results came in and were considerably more disappointing than what we thought they would be. Pick n Pay commented themselves that they are not exactly happy with the results either. We saw that trading profits were down almost a full 100%, despite the fact that group turnover was up about 5.4%. So not a very strong set of results from them at all. They did also give guidance yesterday, post-market close, that the earnings per share figures, the headline earnings per share and or loss per share rather, in this case, would be sort of between the 128 or 1 rand 28 and 1 rand 9 cents a level in the case of the loss per share, and that was as a result of them being able to conclude the reporting on that Zimbabwean business, that TM Supermarkets business. Obviously, they have to account for it under a different accounting standard because it is reporting in hyperinflation economies, so that there is a different accounting standard that deals with that, and they were just finalizing that. And the results that came out then, obviously, this morning spoke to that in part, and obviously their plans going forward around their outlook for the new or the remainder of the year and second half of financial year 2024, now that Sean Summers is back as their CEO.
Let's look at EOH's financial results for the year, which ended on the 31st of July. Those are out, as well as an announcement that CEO Stephen van Coller, who is credited with cleaning up the Viper's nest here, and we're talking corruption here, Jimmy, help us make sense of that performance, but include van Coller's tenure.
Yeah, so I mean, if you think back to the EOH conversation, we've had this conversation in great detail. We've looked at the share price. The share price has gone from currently sitting probably at about a R1.44. But if you just look at where that share price comes from before those announcements that you rightly are alluding to, Toli, around the corruption and around the mismanagement, I mean, the share price at some stage was significantly higher than this. I'm just trying to see, while we have the conversation, if I can remember how high we were at the height of, or at the peak of the business's performance. We were north of 20, I think it was north of 25 Rand. I stand corrected. In 2017, we were close to about 170 Rand a share. So now we're back at 1 Rand a share. So that gives you an idea of the magnitude of what's gone on at that business. And yes, as you rightly mentioned, Stephen van Coller and team have come in, really tried to clean up the business, clearing up some debt, actually having a successful rights offer earlier this year, and that rights issue sort of raised about 600 million Rand. They used that to pay down some debt. They sold some businesses to pay down some debt as well. So really been putting in the grunt work to try and clean up the business. That corporate, or the board announcement rather, regarding Mr. van Coller is that he will be extending his period as the CEO. He's extended his 5-year contract by another 6 months, so then after the 6-month period ending March, he will then retire from the board. So now EOH has gone through probably the lowest of what we could see them going through. The business reported some numbers that look very appealing from a continuing operations point of view, in that there is some stability. Operating profits are improving there, headline earnings per share improving there, even the loss per share narrowing to just 20 cents per share there. So the business is in a fairly better position than where it was last year, and certainly where it was pre-pandemic. The question now obviously remains, and has been lingering over EOH's head, is will they be able to move forward from this? How do they move forward from this? What are the plans going forward? And now that we know that Mr. van Coller will be stepping down at the end of March, that raises the question of succession planning, that raises the question of who will step into the business and what that roadmap then looks like for EOH into 2024 and possibly 2025.
Let's conclude the conversation with Kilter, publishing its third quarter trading statement for the year 2023. What stood out for you from that performance?
Stable performance, but what stood out for me in the Quilter performance is that the assets under management and administration were sort of kept at a steady level, kept unchanged from their June levels. We've seen that a lot of asset management firms, both locally and internationally, in these higher interest rate times have seen client outflows and significant client outflows and minimal client inflows. So yes, the business also didn't see a significant increase in client inflows in this particular period, but if we look at the increase in their new business from their independent financial advisory side, that was up more than 20% year on year. So that's still showing positive signs there, and they're still able to maintain the assets under management and administration that they do have within their stable at the moment. So they've been able to mitigate against outflows from a client outflow perspective and keep the ship sort of stable and steady in this interim period. They've seen signs of growth in their high net worth segment as well as their affluent segment, which always bodes well for an asset management firm in these difficult times. So rather steady set of numbers in that third quarter trading statement from Kilter.
Jimmy Moyaha, independent markets analyst, thank you very much for that markets update.